You might say it's about time that this would end. But, you know, it's still an unknown. This was a severe recession. And I would say that it's looking better, but we could still see home price falls for some time. You have to expect that the bubble burst and it's over. The question that remains is how much overshooting there will be. We were worried that home prices would get abnormally low. And maybe they still will, but this is a sign that maybe things are the real crash phase is coming to an end.
That was Robert Shiller, chief economist at Macro Markets and an economics professor at Yale University as well. He was speaking about the recent data on home prices from his Case-Shiller index. We continue the housing debate now. My next guest says there is no doubt a recovery is underway. The question is, will it last? Michael Fader is the president and CEO of Radar Logic. He joins us now exclusively with his latest update on housing and his latest report. Michael, thanks for joining us. Kathleen Hayes is with us, of course, as well.
Just couldn't miss it.
Can't miss this. Very interesting stuff. And, you know, I think one of the interesting things is your RPX index, you think, is a leading indicator for housing. And it looks like over the last couple times we've had you on the show, and then the data that we see coming out a few weeks later, your index indeed is a leading indicator.
Well, yes, Matt. We, as you know from the show, we started to see signs that the decline in housing prices was softening as early as April. Then as we came through May and June, we began to see signs that, in fact, things were getting better. The most recent data is not only showing that there's improvement in most of the country in terms of housing prices, but it's a substantially stronger improvement than we've seen this time of year historically, which to us says there is some seasonal recovery in prices, but there's also something else going on.
So let's just underscore this seasonal recovery, because April to May, the price change last year in 2008 compared to the price change this year in 2009. Again, you said it's seasonal. This one is extra big, and especially out west.
Well, that's right, Kathleen. In fact, we went back and looked at the rate of change in prices and transaction counts for our composite for the month from April to May, every year from 2000 to 2008, and the median for that period was 1.4% up. This year, it was up 2.7%. The rate of change in transaction counts over that same time frame historically was 5%. This year, it's up 15%.
Go ahead, Matt.
Well, I wanted to get reaction to the Bob Shiller.
Exactly. That's just what I was going to ask you.
So, you know, he says, obviously, we overshot going up. Did we overshoot coming down as well?
Well, we don't. Well, first of all, I guess I should say, Matt, we don't know. But the ultimate answer to that is as we come through the seasonal period now for the end of the year, typically housing goes up in the summer, softens a bit in the fall, weakens a little in the winter, and then comes back up in the spring. As we go through that period of time, if we continue to see buying, if we continue to see strength in these numbers, then have we overshot, or have we simply found a reset point at which the market is willing to buy?
Okay. Bob Shiller, to me, sounded a bit more either cautious or negative, say, than you, Michael, because he said that he thinks there's a good chance we're going to continue to see big price declines for a while. Number one, doesn't seem to be exactly what you're saying. And number two, what is the indication from the traders, the purchasers of your contract that actually shows how investors are betting on home prices?
Well, that's a very interesting question, Kathleen. First of all, I want to be clear that we don't try to forecast where the real estate markets are going. We try to put out a number that represents, if you will, a spot number. I think the Case-Shiller number, which is a terrific econometric read on the housing market, is a little bit trailing based on its construction versus ours. So it's not really surprising to us that his data is now beginning to show what our data has been leading up to over the last, call it, 90 days. The interesting thing that we're seeing in the marketplace is that in the last 90 days, the RPX composite, the actual read on house prices, has gone up a little over 3%. The forward contracts dated December of 09, 10, and 11 have increased by more than 25%. So there's an argument now, and remember, this is a multi-billion-dollar forward market. It's not just a couple of guys saying, well, okay, where should we set this? I guess the indication is that the institutional investors who were looking at 90 days ago, forward prices for the RPX in the 140-ish range are now looking for it in the 180-ish range, where spot, if you will, today's number is actually about 190. So they've collapsed the discount from 20 to 30% down to about 6%, a little ahead of the seasonal downturn. But more importantly, they've pulled the value of the contracts up almost 30% in 90 days.
All right. Hey, Michael, thanks so much for joining us. Michael Fader there, CEO of Radar Law.